with chaos at the New York Stock Exchange.
Get back in there at once and sell!
We are looking at major records for the Dow.
Now is the time to buy.
Well, the law of gravity hit Wall Street today.
We're down by between 3 and 4.5%. The stock market is now down 21%.
Because we're now down 43%.
What in the world is happening on Wall Street?
You gonna do something or just stand there and bleed?
The whole town's gone crazy.
Hello and welcome to this week's edition of the Big Money Report. I'm your host, David Booth, President and Financial Advisor at BIG Investment Services. That's BIG, Booth Investment Group. We're a full-service financial advisory based out of Dover, Delaware, serving clients all across this great country. And you can read all about us at abigplan.com. That's www.abigplan.com. I like to put the show together once a week just to give you a recap of the week behind and a peek at the week and weeks to come. Trying to keep you up to speed with you and your money. And we're glad you're with us today. It is Friday, March 14th, 2025. Shout outs to Don and Susan and just all the folks tuning in week in and week out. So glad that you are taking advantage of the program to stay on top of what's going on out there with hopefully what you consider to be a reasonable and calm voice over the airwaves here. So let's talk about this week and what's going on. The market beatdown continued. Dow Jones Industrial Average down 3% this week. The S&P 500 down 2.2. The NASDAQ Composite down 2.4. And the Russell Small Cap Index looking a little bit better this week, only down 1.5%. The Volatility Index down this week, down 6.8%. But don't let that fool you. It was a roller coaster ride of a week. The volatility index was much higher earlier this week, pushing 30 actually on the VIX, and it came down a lot here towards the end of the week. So came off the boil. It's at a 21.7 right now, so that's looking pretty good. Taking a look at the long-term bonds as measured by the TLT, flat on the week, not a whole lot of movement there. And we'll talk more about the bonds in just a moment because bonds are saying something here, and I want to relay that message to you. As far as the sectors of the market, a couple bright spots. Semiconductors, which have really been taking a hit here, up 0.5% this week, and utilities up 2%. Energy was also up 2.5%. Energy doing well. Everything else was down 2 to 4% on the week. Just kind of sloppy trading there. Gold was up. Look, I mentioned a couple months ago, gold was on the verge of breaking out, and it did do that. It did break out. It hit $3,000 an ounce this week. That's huge. Gold's the oldest investment on planet Earth, and it just hit an all-time high. Now, we don't have the actual metal in our portfolios. We're using a gold mining company. I like gold mining companies because gold, as great as it is, and the return's been pretty solid, it is a dead money investment, right? You don't get any dividends. You don't get any share buybacks. It just sits there and looks pretty, and you make money if it goes up in value. With a gold mining company, that's a business operating with revenues and profits. So we're getting dividends, we're getting share buybacks, and then on top of that, when gold moves, the miners tend to move 2 to 4 times the amount of the metal. So we've got Kinross gold in our models, and just by comparison, gold's up 13.5% year to date. Kinross is up 25.5% year to date. So you get that outsized move, plus you get a dividend. All that said, I'm watching all that pretty close, and depending on how things go here in coming weeks, I might be trimming them back a little bit. Silver also up 3.7%, so metals are pretty strong. So what's moving markets? Well, the same stuff that's been moving markets. But I got to tell you, I think what's really moving markets more than anything right now is the emotion of fear. The emotion of fear. Like all I've heard all week long on the news, recession, the big old R word, recession. Look, we have talked to clients at our office that are absolutely terrified right now. I mean, real fear. Now, listen, I've got frustration. I've been very frustrated because when you manage hundreds of millions of dollars, you'd like to have some clarity as to what the policy is going to be next week or next month and so on. And right now we have no idea. And when you're sitting in front of the screen and everything's flashing red and green, you're trying to decide what to buy and what not to buy or what to sell, et cetera. It's very frustrating when you really have no idea what the policy is going to be. But the fear I'm sensing is just really off the chain. And we've really been having to talk to people a bit just to kind of calm them down, right? Because listen, regardless of what's going on with the political stuff, Exxon's still going to be pumping oil. CrowdStrike's still going to be providing cybersecurity. People are still going to go on Facebook. They're going to bank at Bank of America. The AMD is going to put chips in your computers. and so on and so forth. Comcast is going to send your signal to your house for your Wi-Fi or your cable. The world doesn't stop turning. And what I'm seeing right now out of this market is not the beginning of utter destruction or the pregame to a major recession. What I'm seeing is a correction at the moment. And look, we'll say, David, why are you so calm? The market's just getting hammered. How can you be so calm? Because listen, the stock market is not that smart. That's how I can be this calm. The bond market is the smart one, okay? The bond market's a much larger market, and it's a much smarter market. The stock market is like the quintessential dumb jock. Now, I'm not saying that all jocks are dumb, okay? So for you big athletic folks, don't get me wrong, I'm into sports as well. But I'm saying there were some that were dumb, right? Some of them were really talented athletic-wise, but they were kind of dumb. So the market is like that, right? It can blow through the offensive line or the defensive line or whatever's in front of it, and it can score big, and it can make you feel great. And it can also drop the ball and fumble and really mess things up as well. The bond market is the valedictorian of the class, okay? You don't hear much from it. Not a lot of folks paying much attention to it, but it's killing it behind the scenes. That's the bond market. The bond market has got a message for you folks. Recession is not imminent. Recession is not imminent. One of the things that I pay close attention to is credit spreads. That's the difference between the interest rates on high quality government bonds and what we call junk bonds or high yield bonds, your lower credit quality bonds. When those spreads are narrow, that's a strong indication that the economy is on solid footing. When those spreads widen, okay, and you really see a big widening between high yield and good quality credit, that's when you have to start getting concerned that the bond market's trying to tell you something negative. On top of that, I'll tell you this, the action in bonds hasn't been what you would expect. They've done well year to date. Don't get me wrong. They're holding their own. But it's not really what you would expect if there was this full-on fear of recession, right? The big money, the institutional money, just doesn't seem to be buying into that narrative at the moment. Now, they are buying into a market correction. The commercial traders, they were like big time selling and even going short over the week, et cetera. So that's just big money trying to take advantage of the moves of the market. I think what we've got on our hands right now is a correction. I think that right here, right now, it looks pretty exhausted. The S&P oscillator, the mark charts, we talked about that last week. A lot of this just shows and points to some exhaustion here in the selling. So I would not be surprised to see a rally here in the next couple of weeks. All that said, I do have some bad news. I was hoping the S&P 500 would retake 5783 as a level this week. It did not do that. That's a level that if it had caught that and reclaimed it, would have made me feel a lot more comfortable. Because it didn't do so, we kind of have like this confirmed breakdown here in the S&P, which just means it could be sloppy for a while longer, right? A lot of times you get these corrections and the market will have a bounce, it'll have a rebound. And then within weeks or maybe a couple months, you'll have a retest of those lows. You'll have a retest. It's very common. And given the fact that we've got this confirmed breakdown, I think that might be likely. Of course, here's another strange thing going on. 3 weeks ago, we had a confirmed breakout. So this is one of the fastest 10% declines from an all-time high in U.S. history. When you look at the other ones from the past, they have had a tendency to shoot right back up again because they've fallen for irrational fear. Maybe it was COVID. Maybe it was 9/11. Not that 9/11 wasn't bad, it was. But again, the knee-jerk reactions. A European debt crisis, that was a big one. So there's been a few times when the market has done this, and it's turned right back around and rallied right back again pretty quickly. So if we're not slipping off into the abyss and complete total apocalypse as a country, then we could see this thing rebound pretty quickly. I like where we stand at the moment. We did some buying during all this weakness, but right now, I think we just hold steady right where we are, let things kind of unfold here. I might even look to do a little bit of trimming. A lot of it's going to depend on where this market finishes at the end of the month. To me, that's far more important than where it is on a week-to-week basis or some of these levels that are important. They're not quite as important as this month-end indicator that I track very closely. So I think things are set up for maybe a good rebound into the end of the month. And if that happens, if the luck of the Irish are with us, then maybe we'll get a little push higher. We can finish above that indicator from March, and I'll feel a lot more comfortable about the medium term. But we could still have a retest of the lows in the future, probably heading into the summer or something like that. So just keep all that in mind. But for right now, folks, don't be afraid, okay? Market is hanging in there. America's economy is looking okay. I think the GDP number is going to be pretty ugly next quarter. I think we talked about that a couple of weeks ago. Look, all the purchasing managers in America, they tried to get as much stuff as they could before the tariffs started. We had the highest trade deficit ever in the history of the country last month, okay? That's going to give us a negative GDP, but it should correct itself the very next quarter when we have stuff show up in inventories and whatnot. So I wouldn't get too concerned about all of that. Everything else in the economy is mixed, some mixed energy there, but nothing's really indicating that we're going off the rails yet, folks. And the bond market, the valedictorian of the class, is saying, slow your roll, don't be too afraid, stay calm and press on. So with all that said, I'm going to go ahead and wrap up. But between now and next few meetings, you're thinking about your future, your long-term goals, all the things you want to do with you and your money. Maybe it's celebrate a huge birthday, Tom. Hopefully you had a happy birthday this past week. Hey, maybe it is buy that second house, quit your job, your regular job that you've had for years and say, you know what, I'm going to go work in another country. I'm going to do something I really want to do and take things to another level. Maybe it is take that big vacation or pay for college. Hey, you know what your goals are. Don't just think about them. Think big. Think big. And I will talk to you next week.
Thank you for listening to this week's edition of the Big Money Report with your host, David Booth, President and Financial Advisor at BIG Investment Services. For more information on BIG and how you can access their planning and investment management services, visit them at abigplan.com. That's abigplan.com. Or call them toll-free at 866-946-PLAN. That's 866-946-7526. The foregoing content reflects the opinions of David Booth and Booth Investment Group Incorporated and is subject to change at any time without notice. There's no guarantee that the statements, opinions, or forecasts provided herein will prove to be correct. Content provided herein is for informational purposes only and should not be used or construed as investment advice or a recommendation regarding the purchase or sale of any security. All investing involves risk, including the potential for loss of principal. There is no guarantee that any investment plan or strategy will be successful. Please consult a professional before investing.